Okay, Bruce here again. Targeted wealth creation back at you for Coin and Cony. Let's jump in. So, Coin was down 3.41%, right? It traded from 245 down to 236.65. And what did Cony do? Cony went down two-thirds, not quite two-thirds. Down to down to 23.94 from 24.41. So how did that impact our weeklies or synthetics? We put no new trades on, and there were no new shares added, right? After having 1,075,000 shares. So Cony didn't get to the 25 barrier. Remember to hit the accounting number to show, but still doing pretty darn well. So as we set, they're in terrific shape now, right? We were setting up at 245 and we had a large amount both at 250 and a bigger amount, 10,000 and 13,000, which clearly are the bulk, expiring this Friday. Not that far away from 245, the previous Wednesday close or Tuesday close. So going in, we had 3 trading days. We could have blown right by that. And the last thing Coin and Cony, or Cony in particular, can afford is to get hurt on its weeklies anymore, right? We're already behind the 8 ball there. So this was positive, this pullback, right? So let's go see what it looked like on the weeklies. So here we were, right? We had written calls, and I'll give the fund manager credit, right? They screwed up last week. They bought something back for $11. They could have bought it $3, and it was like 3,000 contracts, or I'm sorry, 23,000 contracts. I'm thinking of Misty with a smaller amount. So it killed us. It really, really hurt us. So what they did this week is excellent. They positioned us well. We got lucky. It traded down a little bit. Now they're in a good position to not have to panic going in on Thursday and Friday. It would take a big update. I looked in the aftermarket, or pre-market, I should say, both markets really, but now the pre-market, and I'm showing, I just updated that. Let me update Coin. I only look at Coin, right? Because Coin is around 234.9, right? So it's not up a lot. I mean, the pre-market's early. It's, well, less than 2 hours. So there's some movement, but it's always light in the pre-market unless some big news comes out. I think the PPE, as they call it, will be out on Friday, and that could impact the perception of inflation or not. So we have a few market drivers still to go, but overall, I feel good about this. So what did that do on our weeklies? Well, we went from being behind on our weeklies to now having captured almost half the money on paper. 46.25% of the 6.6 million that we sold it for, we could buy it back for 3 million. Well, ideally we buy it back at these high numbers for nothing, right? A penny. You have to buy it back for something, a penny, or 2 cents on Friday. So pretty good overall. I really like where we are at this point, but we really needed it. Hey guys and girls, peoples, I saw Jay Petrocelli. For some of you that might have caught the interview, he had an interview with one of the bloggers, I think Coach, and I listened to it. I didn't listen to it live, but I listened to it after the fact. Always learn a tidbit. I mean, I probably knew 98% of it, probably could have answered all those questions, but Jay's a very bright guy with a lot of experience, and when the right question is asked, he answered it. I particularly wanted to hear his answer, even though I thought I knew what he was going to say about can you buy both Tesla and Crash and then still make money. And he said, yeah, And he threw in one caveat that's a good point. Now, nobody's talking about it asking me right now, although Paul, you've mentioned it. And I told you, yeah, I think you can. Jay further mentioned it, and it's worthwhile because they're going to roll out more bearish funds and they're going to roll out more funds. Jay talked about 30 funds that they've applied for. We're talking 3 months though before you'll see them, and they'll only pick some of them, right, that they think fits the marketplace at that time. So what he said was, as long as there's reasonable swings up and down, if you go up 5 or 7% in a week and you vacillate 3 or 4% back and forth, then you're going to make money on both of those funds and you're not going to lose a lot in NAV. But when you get a big move, so if you get a 30% move one way or the other, you're going to get capped on both of them, right? So on the going short, you're going to only gain a portion of, if it drops 30%, you're going to make your 5%. And then on the one that you're long, you're going to make your 5% and the rest of it's capped, right? So what he was saying is that's when you don't win, right? One fund goes up proportionately more than the other, right? And the other one takes a bigger hit. So your net is you don't really win, but when they're trading moderately back and forth, and that's true just on one of these funds, again, when you're in something, take Cony, okay? Cony can go down 1 or 2% for the week, and we can make our distributed income. We can make our weekly income without the synthetic getting killed, right? But if every week you go down 2 or 3% and they're week after week after week, you keep getting that income, right, from the weeklies. But what happens to your synthetics? They get killed, a la Tesla, right? If you do that for 6 months or 5 months or 4 months, and you're in a bear market, you go down 3 or 4% average on the week, just in that fund, you get a reverse split after, 6 or 8 months of that kind of stuff. And I love how the haters run out, oh, Yield-Max is a scam, they only just return your money back to you in the form of distributions, but you're losing it all in the NAV, which is just crap. It's bull. They're a legitimate fund, they're legitimate people. It's the whim of the market. Now, these are bullish bets when they're, like this, 99% of the fund. So if that underlying takes a 40% hit, you're going to take a 38% hit or some large percentage of that hit. Not quite the full hit, but so what, right? And maybe your distributions, you haven't been collecting them long enough to offset that. So just understand it. Whenever I talk about these, somebody says, well, should I buy this one? I always say, are you bullish on the underlying? Are you bullish on that? Can you withstand a little pullback and buy more maybe to DCA into it, to dollar cost average? Because you have a bullish mindset, right? Then we're okay. And then there's hedging strategies for a unknown, geopolitical event that causes the market to semi-crash, right? More than 15% is, I don't know if you know, is considered a crash. I don't personally, call it a crash, but it would be referred to as a crash. But anyway, jumping in. The cool thing that Jay said, and I've talked about it without saying exactly what he said. He said, hey, we're looking forward to Cony. We estimate around August, and I'm telling it because I'm doing Cony. I mentioned it in Misty. But if you look at the history, I think it's got 8 payments, right? I believe it had 5 last year, starting in September, October, November. So it had 4 or 5 last year. And it's had 5 this year. Let's say it had 4 last year and 5 now. So when it pays in June, and it pays in July, and it pays in August, that'll be 1 year. They're anticipating that it will have returned, and very likely, the $20 that the fund started at. So for all those naysayers, right, and I know that Cony is one of my when I put Cony up regular, it's my most popular video I do. Even though Misty is shorter term and is paid more money, Cony is the most popular because it has a longer track record, like a Tesla, only it hasn't done negative and it's up from the $20, right? So if you bought it in the beginning and you hold it through August, you got $20, give or take a few cents, right? And you've got a $3 gain, right? Which is 15% on your 20 if you bought it on opening. So not a bad situation, right? Got 100% of your money and you got a gain, and that's what these funds can do. Nobody says it's forever. They don't sign up to say lifetime. Hell, they don't even say you're guaranteed a payment every month. So just a reminder, it's exciting. I love Cony. I love Coinbase as an underlying. Hey, I don't know. I may turn bearish in February of 2025. We'll have to see, right? I think crypto's clearly going to run, and then when it runs way up, maybe it's time for a pullback. So maybe I'll stay in Cony or Misty, and I'll just, buy some puts, use some hedging strategies. Maybe I'll go into an ETF fund that's 2 times negative Misty or something. Explore hedging without giving up some of the income that I'll be getting. But I don't want to be sitting there holding a $35 average price on something and see it go to 16, right? Even if I'm paid monthly income. So just a reminder, folks. All right, let's jump back in here. Long rant. Bruce and his rants. But hopefully you learned something. Okay. So here's our weeklies. We look fabulous. Fab, right? Collected 46%. Low likelihood that we run past these guys. Could it happen? Yeah, it could happen. Okay. So love that. Let's see if there's anything else I really need to tell you. Synthetics are from yesterday. There's our 20 million. So let's go look at the holding page. I didn't talk about that one. So we're still sitting on a $20 million gain. But look, it was 41 yesterday. But so the yin and the yang. We came down. It took away our paper profit on the synthetic, but it bailed us out of a losing possibility. And at yesterday's closing price, we were really losing, right? This number was 5, 6, 7, I don't even remember. It was over the 6, what we got paid. And now we can buy it all back for 3.6, but based on where we're heading, we'll be buying it back for a penny or two. Okay, so what's fair value? 23.94 is what we closed at, and 23.86 is fair value. Okay, no new shares. So, I'd like to see this, but look how much they're volatile, right? They go up 10 points, they come down 10 points, right? So nothing surprises me. I think 225 to 250 will probably be in that range for another 2, 3, 4, 5, 6, 7 days possibly, right? At some point it's probably going to break to the upside. As long as it's still heavily Bitcoin oriented, even though it's an exchange and it works off other cryptos, it still has sympathy in with BTC. It looks like now the fear about CME being a competitor, and some of that's died down because we see this running sometimes. So all it's doing now is pulling back, but the volatility will help the IV. All right, let's go look. So nothing else to tell you there. Let's go look at the payouts and I can wrap this up. All right, so I'm still showing a buck. I know you'd be horrified, but remember, it's paid 107 since I've owned it in all these months, right? But going back, I have a spreadsheet that tracks it back since its inception. I track every single fund, right, since it started. And I think this was total through May was like 1550 or something, right? So I can, they were talking maybe we'll get 450 in the next 3 payments, and there's where it pays back 20 bucks. So maybe we'll get more. I hope we get more, but let's analyze it. So we got a 3-cent profit, right? We got this number to positive. yesterday because we sold some more weekly calls, which it sure looks like we're going to keep all the weekly money. And some of that weekly money even goes out to the following week, right? Nope. All of it was right here. I was thinking this one the other day was the next month, but it's not. Let's see if in May. Nope. None of them in the next week. They're easy to mix these up one and another when you do 4. Okay. So where we're hurt is this synthetic, right, that we had to go get out of. It just cost us, I think, 80 million or something, right? I don't even remember which one it was, but it was ugly. It was very ugly when we had to do that one. I know that. So we're looking good now, and we're progressing. What else on the payments? So this 244 is what hurts us, right? Because that's a positive number, but that's a loss, right? And you want a negative number over here. Like this 27 meant we had 326 extra. So we collected $1.76, and they said, you know what? You got money over here. We're going to give you another 50 cents, 52 cents of that, right? So that left us with 17.7 to carry forward. But look, we got a loss over here. So they're having to borrow money from some of this money. Well, 17 on 24 million shares is not even a buck. It's like 77 cents. So that's probably what they should pay us. But I don't know if they want to break that dollar scenario. So what else could we do? Well, we should collect all this. We're going to write one more weekly, right? I usually go this through, especially as we close in on the more accurate forecast. So let's go to May. What was the total amount that we wrote here for the week? Well, it was 6.5, 6.6, call it almost 6.7, right? And that's summed up on our weeklies. So we've got another 6.7. If more people buy the fund, they may not have, you know, who knows in just the next few days. So for next week, but let's say they get 6.8. Let's give it the benefit of the doubt, and they write it at a price that they can capture it at, and you gain another 6.8. Well, even 8 million, they're not going to get that. But if they got 8 million, well, look, what are 8 and 24 having in common? Probably 70% of you guys can solve that, right? 24 is a 3 factor of 8, right? So 8's 1/3. What's 1/3 of a dollar, right? What's 1/3? And that's what we care about, payouts in dollars, 33 cents. So even if this jumps to 8 million, it's only 33 cents added to 3 cents, so it's 36 cents. And if this goes up too high in the share count, it's 32 cents, 31 cents, right? So high shares hurt you. They give you more money to play with, but you better perform. So right now, this is dragging us down. So I don't expect a big payout, but I do think they're going to pay us $1, $1.07. And they've paid those amounts before, right? Look at this one. I know I've used this a couple times. They had a loss over here, but look, we only have 3 cents. They had $1.57. They got paid 2/3. They're not going to pay us 2/3 of that. It would be 2 cents. It's a joke. They're going to give us $1. They're just going to pull the money out of treasuries. They're going to sell the other, because if they sold, what are we set at? 20.4. So you know what they could do? They could roll this synthetic next week on, Monday, or Friday's the day they have to, well, they don't have a big loss here, but if they want to stick the money so that they can pay it, all they got to do is roll the synthetic the following week. And that, if it stays at 20 million, it could go up more. It could go back to 40. And they roll that, right? And then the 40 million is offset. This only becomes a 19 number, right? So this becomes like 70 cents. So they go, okay, we're going to pay you your $1.50, your $1.20, and it looks better altogether. So I thought I would just dive in and explain. And I love when I watch the Jay interview, because people ask him a lot of questions, and my thinking is right in line with everything I said is exactly what he talked about. I learn one or two nuances from you. Very bright guy, but so far by listening to other interviews and just studying and watching how these funds pay out and what they're doing, I think I got a pretty good handle on it. So I look forward to my Ask Me Anything. I'll get to a live within a week or so. And I'll do something in the live, and then we can Ask Me Anything types. I think it'll help you guys. You guys ask, I get great questions every day, right? Really, really good questions from you guys. So much appreciated. Much appreciated the new people subscribing. Love all your comments. Keep it up, guys. Okay, thanks. Bruce out. Not a financial advisor. This is not financial advice. See ya.